The Physician's Road. Create your life in medicine on your own terms. Today, we are on the path to wealth.
The Physician's Road is brought to you by Vernonville Asset Management. Vernonville Asset Management was created to help physicians build wealth and create income beyond Wall Street. Through our exclusive private investments, doctors can begin to free themselves from the burdensome regulations in healthcare by creating income streams independent of medicine. Go to incomebeyondwallstreet.com to get your free report, Wall Street's Biggest Lie. Again, go to incomebeyondwallstreet.com to get Wall Street's Biggest Lie and free yourself today.
Welcome, everyone, to the Physician's Road podcast, where you create your life in medicine on your own terms. Today, we're on the path to wealth, and we're going to be talking about one of my favorite things in the world, and that is real estate. For those of you who know me, know that I love to invest in real estate, and I'm so happy to have a friend, colleague, Greg Bond, who I've known for, 4 or 5 years now, and we've watched his company kind of blossom and transform and flourish in the Central Florida area. And so what he's going to talk to us about today is the process of turnkey real estate investing. And for some of you, that may be a new term, and we'll go into that some during this interview. But Greg makes it easy for people to get into real estate where they still own the project themselves, and it's in their own portfolio. And we'll get into that. But to give a little background on Greg and who he is, he's the principal and founder of Greater Orlando Home Buyers. He's the co-founding partner. He's also a licensed real estate broker and property manager. His specialties include locating and acquiring assets and renovating them, whether they be on or off market deals. He also has a specialization in structuring deals and property management and in building relationships. He's renovated over 250 properties in his career, and he has formal training in many assets and facets of real estate investing. He's been investing for over 25 years. He's a member of the National Association of Property Management, also a member of the National Association of Realtors. He has a Bachelor's of Science in Industrial Engineering and an Associate's in Aviation. He has served as treasurer of the Central Florida Realty Investors for 2 years in 2016 and 2017. He also served in the Air Force Reserves for 4 years. So, Greg, who else are you? What else would you like to tell our audience?
Eric, I'm also a husband, father. My wife, Jane, she does mortgage foreclosure, so kind of the same sort of business, real estate at least. And I have 2 kids, 2 grown children. Both of them graduated for the University of Florida up in Gainesville. Okay,
great. And yeah, I love Jane. We always have great conversations whenever we get together. Perfect.
And so, with you too.
Yeah, absolutely. So tell us about your personal real estate investing experience. What's great about you is you're an investor. And so you're not just somebody who's in the game just to be property managing. You actually are an investor yourself. So give us a little bit of background in terms of how you got into real estate investing and kind of the why behind that.
Yeah, Eric. Well, I got into it because my wife and I, Jane and I, decided that when we first got married, we were going to live on my income and bank her income, so we didn't get locked into living on 2 incomes, because when we had children, we wanted her to have the option to stay at home if she wanted to. So that's basically what we did, and we began buying real estate. I took a course from it was through our church, Crown Ministries, and they talked about how your house was your best investment. I know that not to be true now, but at the time I looked at it and said, wow, if your house is your best investment, why aren't 2 houses, 5 houses, 10 houses, 20 houses even better? So we started acquiring real estate. Before you know, we had, 24, 25 properties. And I just looked at it as retirement income. At that point, I wasn't buying for anybody else. It was just for our personal use. Then along 2008-9 timeframe hits, and we had a business going. It was a paper-based map company. That paper-based map company failed at that point as technology plus the economy, the double whammy, just kind of did in the paper-based maps, and I began looking to reinvent myself. And since I'd already had quite a significant background in real estate, I decided to jump into real estate. I didn't realize how good it was till I got into it in 2008 and 9 and realized, wow, this is just one heck of a tremendous market. So
got it.
Ran out of cash and began looking for ways to generate cash, and I found all these great deals, and I started to get to the point where I couldn't close them. So I started looking to friends and family to buy property for them and manage property for them, and that quickly turned into buying property for a lot of people all over the world. So.
All right. So you morphed from investing for yourself and you were in a different career, and then that career ended, real estate becoming your career, and then moving from that to helping others be a part of it, and then morphing your business into servicing the needs of not only your own portfolio, but the portfolios of others as they're looking to expand their real estate empire. Would that be about right?
That is totally correct.
Okay.
Yes.
And does your firm have a specific mission? Is there something that drives you as it relates to your day-to-day business?
Absolutely. We wanted to develop one relationship at a time and help them build wealth one house at a time. So it's basically a relationship and a property. And,
got it. And so were you able, so let's take us through 08 and 09. What did you learn during that time period? Because many people are scared to get into real estate. They think that, it's super risky and, they may not want a property in their own name and these types of things. What did you learn through the downturn that made you confident to buy when other people were selling?
Well, I always look at, what's my exit strategy? What can I do? And I use kind of a three-prong approach when I'm purchasing. I look at the square foot price. I look at what the return on investment I'm going to get. And then I look at basically what the overall cost of the property. And it really was a tremendous deal. When I looked at what I was paying just strictly on a square foot basis in the early 90s when I was purchasing property about $65 a square foot. When I started purchasing in 2008 and 9, it was $30 a square foot. So it was less than half. So again, I was just shocked at the opportunities and the prices and how low they were and the return on investment you can get. It was crazy. I was like, I want to buy so much, but I've only got so much cash. And I'm very limited. I couldn't get loans at that point because we had 25 loans in our name. And so I was basically an all-cash buyer from 2009 through 2014 when I finally got a local bank to take a look, and I showed them what I was doing, and they said, great, we like what you're doing. We like your systems. We like you, and we'll start to provide some financing for you.
Great. And so as a mutual mentor of ours likes to say, no investor left behind. So let's talk about square foot prices. I know it's a little bit in the weeds, but I like to have our investors become more educated. And so let me know if you have any change in this, but the per square foot prices, to me, I use that as a metric of the ability to rebuild that asset, whatever price point that is. And so if you can buy an asset below the price point of what it would cost to rebuild it, you know that you're basically buying below what we call replacement cost. But what it is you're already buying the property with equity in it.
Exactly.
How would you, do you make any change in that or?
No, that's exactly how I look at it. I always want to look at my exit strategy. If I had to get out of this property today, can I at least get out of it with what I've put into it? And so that's just kind of a metric that I also use and go, okay, if it's below the cost of building, then there's a pretty good chance you're going to be able to get out and not get caught with too much. So.
Perfect. All right, cool. So now let's do a little bit of ground laying. So what is turnkey investing? As you see it from your company, if you were explaining it to a 5-year-old, what is turnkey investing?
Turnkey investing, Eric, is buying the property, rehabbing the property, putting a tenant in the property, and then selling that property to an investor. So the investor we try and take as much risk out of the equation as we can. So that investor can just look at that property. Since there's already a lease there, they know the return on investment coming in. They know how long that lease is going to last. And it's just basically saying, pick your property. Once you pay for that property, we start providing you an income stream on a monthly basis. So through our property management side, it's on the 10th of every month, we ACH directly back into the investor's bank account.
Okay, perfect.
Rental income that's come in for that month. There
it is. And so basically you're taking most of the hassle out of someone owning a single family asset, from what I'm hearing you say, so that they have certainty of knowledge that there's someone who is looking out for the property for them, has basically packaged it up into a nice bow, presents it to them, and then will help them manage it through the process of ownership and even turning over tenants over time. Would that be accurate?
Exactly. We also offer some guarantees with that, Eric, just to because if nobody buys these properties, we're holding them in our own personal portfolio. So I have certain criteria that I go by. Whether it becomes an investor property or whether I hold it myself, it's insignificant to me. I would prefer to hold everything I possibly could, but again, I can't. I'm not wealthy enough to do that. So therefore, I use my skills and my relationships to rehab as many properties as I can and make them available to as many investors as we find who are interested.
Okay, so let me make sure I heard that correctly. So essentially, you're purchasing these properties as if you were going to own them. Is that correct?
That is absolutely correct.
Oh, okay. We've never discussed that before. Okay, well, even better. So, so from that standpoint, you don't mind if you sell it or if you keep it. For you, you're evaluating it as if it were going into your own portfolio.
Correct. I mean, obviously, I'm limited by cash, my cash to hold as many as I would like. But yeah, I hold them, I rehab them to that standard, and again, since I'm doing the property management, I want them as maintenance free as I can possibly have them, which it pushes me and the investor in the same position, right? We're both wanting the same thing. We don't want any repairs because that cuts into your ROI. We want good tenants. I want good tenants because I don't get paid from a property management standpoint unless there's a tenant generating revenue in that property. So we're both pointed in the same direction.
Got it. All right. Well, that is perfect. So why should a busy professional, so we are focused primarily on physicians and dentists and other healthcare professionals who are busy people who have disposable income oftentimes and are looking for different investing alternatives that are out there. Why would someone consider turnkey investing?
Well, I think for the busy professional, they don't have time to go out and search for all those best deals, right? And then a lot of times what I found is I didn't realize how unique I was in the aspect that I do this full time. So I am constantly on the hunt for properties. And then I have a network set up of rehabbers that they're constantly rehabbing for me. So I've set up a standard of rehabs that I paint every property a certain color, right? So I don't get those questions. And well, if somebody else was setting up that same system, they might not be. And in fact, I went through quite a few rehabbers before I ran on to the crew that I'm currently using. And that's a costly a lesson in going through that process, because those rehabbers sometimes steal from you. They sometimes don't do a great job. They sometimes don't finish the job. They sometimes don't start the job after you've given them deposits. So there's all those risks in there. But since we've got a really good crew that's been with us, basically a lot of them since 2009, they've continued. They know that we're going to continue to give them work as long as they're doing a great job. They're going to continue to do a great job for us, and it creates a great relationship.
So many nuggets in there that you just said that an inexperienced real estate investor didn't even realize what you said in terms of the deposit, them not starting work, evaluating and finding properties. I tell people that real estate is not complicated. It can be counterintuitive, but it's not complicated, but it is nuanced. And you have 25 plus years experience. I have over a decade experience. There are things that we know just intuitively because we've been doing it so long, that a new investor who may not have the time to devote to learning, what I say is, if you want to invest in real estate where you are owning the property yourself, you're not in a syndication where you're more of a passive investor, that it's not complicated, but you do have to learn a skill set. And you just ran through in 30 seconds probably 3 years worth of skill set without even recognizing it. And I just want to make sure I'm pointing that out to potential listeners, that there is a skill set. Yes, you can do this if you want to, but there is a skill set and a training set that you do have to learn and go through if you want to do it on your own. To me, the next best thing, if you want to own assets in your own name wholly by yourself, for a busy person, is this turnkey model. And this is why I'm glad we were able to get together on the summit, because I have a lot of people who are coming to me who are asking, well, I want to own some stuff myself. And so I purposely sought you out to see what you were doing, because I know the quality of person you and Jane are. And I know that if you're offering these properties to other people, that you're backing them, number one, and you will take care of them.
Yeah.
And so let's talk about the life cycle of a turnkey property. Let's assume someone wants to own one for 5 years. What does that typical life cycle look like?
Life cycle. Well, I always like to talk with the individual investor and say, what are they really trying to accomplish? Number one, what's their exit strategy? Some people come in, Eric, and they say, we want to own this forever. We're going to put it in our self-directed IRA. We're going to hold it there, or it's going to be transferred to our kids at our death, and we just want it generating as much income as we can. I work with other investors who say, listen, this is going to be a 5-year deal for me. I want to be in and out in 5 years. And I try and direct them depending on what they're looking for and what their goals are. I try and direct them into one property versus another because of those type of issues. So I really want to talk with each investor and kind of get a feel for what they're trying to accomplish and what their exit strategies are.
Okay. And then how do you help them when it comes to exit strategy time?
I also have a brokerage. So we then either can do one of two things. We're doing that all the time with investors. It's just as the life cycle goes through and life changes, we either can sell that property to another investor, or we basically wait for the lease to expire. Once that lease is expired, we will then rehab or do whatever maintenance is necessary to sell that to an owner occupant. And so we would put it out on MLS and sell it that way. You tend to get a little bit more money, but you really need to compare what you're getting, what you're netting out of that process, because you've got on that side, you've typically got a realtor's commission at typically 3% on each side. So you're looking at 6%, and that may equal pretty much what you may get if you just sold it with the investor already in place to another investor who is looking for a turnkey type property as well. So.
Got it. And you help people, you and your staff help people kind of run these numbers and kind of handhold them through that process of disposal. So if they choose to?
Yes. So we would give them analysis and say, here's what you would expect to get on an owner occupant deal once once the tenant's out. Again, there's going to be a little bit of downtime there where you're not getting that income in, and that all comes into play as well in the numbers. And so that would be plan A. Plan B is you just continue to rent it, renew the lease, sell it out to an investor that wants to buy the turnkey property as it sits with a renter in place in that property.
Okay.
In that instance, you'd have very little expense. It's significantly less than it would be paying a commission.
Got it. Okay. And so in terms of who is your typical client who purchases a turnkey property? Talk about how many they may purchase at a time or over time. Is there a specific job category? Do you get that deep with them? What does that look like?
It's professionals. It's a lot of them from California, a lot of them from out of country, looking to basically limit their risk. So they do have money in the market, but we're looking to basically diversify their holdings and say we want some hard assets as well as some stocks. So that's basically that's where we come to play, is helping them put those hard assets into their portfolio and managing those assets for them in such a way that we're getting them the maximum return on investment. Again, as I'm sure most of your listeners know, with the 4 quadrants, and you're looking at your cash flow, your depreciation, your amortization, and your appreciation. So when you look at all 4 of those things, real estate, in my mind, is just the best possible investments you could ever buy.
Oh, I said some of our investors are new to real estate. Sorry.
Yes.
And those 4 quadrants, actually, what I'll have to do is I'll probably have to do a real estate beginners podcast to really dive into that. But suffice it to say, what Greg just explained was the 4 of 5 ways that you can make money in real estate with single family homes. And there's a 6th way with commercial property. And what I'll probably end up doing, I did a webinar with it, but I'll probably need to do a podcast for those of you who have not gotten my webinar on that. Now, if you like the webinar, you can just send me an email at feedback@thephysiciansroad.com and I can send it to you. But I think I will end up doing a basic real estate investing podcast as well, just to catch everybody up on those 4 to 5 ways in which they can make money for every dollar that they put into a piece of real estate. And so let's talk now about, let's take you out of the equation, because I'm going to let you come back and give a commercial for your company in the future. But let's talk about what someone should look for in a turnkey provider. So let's just say they don't want to be where you are, but there's some other areas, or they want something more local to them. What questions should they be asking? What should they be looking for in a turnkey provider?
Eric, I always tell people they need to basically look for somebody that eats their own cooking, right? So you want somebody that's investing themselves. I come at all of the properties that I purchase with that mindset of, where's this property at? What's the return on investment going to be? What's the exit strategy? So you want somebody with that sort of mindset, and you want somebody that knows the local market. You don't want to typically buy houses in bad neighborhoods where you're going to have lots of turnover. Sometimes you can buy those properties cheap. I've found in the long run, those properties aren't worth it just because of the turnover. So you really want to know your markets, and you want to know that somebody is very knowledgeable in their area if you're going to work with them and trust them with that sort of asset. So I would say somebody that eats their own cooking, knows the markets, and also somebody that has experience. You don't want to go with somebody that's just started out. You want somebody that has a fair amount of experience, so they've gone through some of those learning curves, so you don't have to pay for somebody else's learning curve.
Got it. And then just so we can go back and clarify. So when you say turnover, we're talking about tenants turning over. So you have multiple tenants in the property. Is your biggest expenses in residential real estate is tenant turnover and then kind of make-readies, rehabs because of it, and vacancy. And
Correct.
So vacancy is a big issue. And also, if you're turning over multiple tenants every year, it's going to eat into your profit as well.
That's a huge bite out of your profits, Eric, is that vacancy. So our vacancy rate right now, we're averaging about 3% vacancy, and we're keeping our average tenant in excess of 36 months. So we're turning a tenant every 3 years. Obviously, that's just the average. So a few less and a few more.
Got it.
The other thing that I would add to that list would be make sure that your turnkey provider also is doing the property management. You have a lot of turnkey providers that don't have the property management side. They turn it over to another company. Now when something does go wrong, or if something does go wrong, they point at each other and you don't know who to go after. If you got a turnkey provider that also has the property management, there's only one person. You're looking at me. I'm the guy. I deal with it all. So that's why I offer the guarantees that I do.
Gotcha. And you or somebody on your staff, I will assume, because we don't want all that falling on you now.
No, absolutely not. No. I found out I couldn't handle it all. I tried for a while, and definitely need to have the team.
Absolutely. We're working with physicians to try to help them learn how to build teams as well, because oftentimes we are very much trained as lone wolves. And what I see is a lot of physicians try to do too much themselves and take on too much and want to be the person who's always in charge and always doing things. And it can lead to a lot of kind of frazzled kind of nerves and a lot of frustration. So talking to people like you is how we help them to begin to build their team when it comes to their wealth. And so we really appreciate it. And so let's now talk about some pitfalls in turnkey investing. You talked about a little bit about from a provider standpoint, but let's just talk about it in general. What are some of the pitfalls that someone needs to be mindful of?
Well, I think they really need to be mindful that real estate obviously is not a very liquid asset. So when you look at a stock or a bond, you sell it, you get your cash, and you're done. With real estate, it's not that simple, right? There's some time involved with exiting that property, and you need to understand that that's just the way real estate operates. I think there's so many benefits that offset that, but again, you want to certainly have some liquid capital. Everybody likes to talk about how every deal is great and wonderful, but part of the down and dirty also is that you do have turnover, and you do eventually have to replace a roof, or you do have to replace an AC. That's just normal business, and that those expenses creep up on you pretty quick if you're not planning for them. So I'd like to tell investors you need to be putting something away, even though you're on an annual basis. You may not be expending dollars, but if you're not planning on that new roof, right, when that $10,000 bill comes due, it's a big shock. So just plan that that's going to happen, and plan that you're going to have some vacancy. We have 3% just because of our market right now. At one point, I was high as 12%. That was as the crash was happening, and I was losing tenants. Vacancies were way up there. So it's you got to take the good with the bad and understand that the market we're in right now is just tremendous, and I think it's poised to grow even more. But just realize that there are downtimes.
Yep. And so what did you do to offset the downtimes when they came?
Basically, I did a couple different things. One was I had never had taken Section 8 before. So I looked at it and said, I'm having problem finding tenants, so I'm going to take some government subsidy and I'm going to take Section 8. That turned out, in hindsight, not to be the greatest decision, because what I found is a lot of the people, they didn't take very good care of the homes as far as the maintenance. And so once I got the houses back, and they typically only stayed a year. So once they exited that house, and I found, wait a minute, there's $2,000 above the security deposit in maintenance and repairs that needed to be made to this property. I quickly learned that from a financial standpoint, it probably was not the best decision to take Section 8 tenants, and consequently, I no longer take Section 8 tenants. Well, I do take a few. I kept a few because it's like everything, you don't throw out the baby with the bathwater, and there are some very good tenants in that program. And so I kept the good, and I didn't renew leases for the tenants who were exiting that didn't properly care for the homes.
Got it. And was there anything else you would do differently for the next downturn, next go around?
I think I would, and I'm trying to do it right now, is trying to conserve some more cash, because cash is king during those downturns, and you get some unbelievable deals. So I'm actually looking quite forward to the next downturn.
Got it. Okay. And so in terms of, let's say someone does get a turnkey property, and it doesn't have to be from you, but what would you say is going to be their involvement? So just in a typical kind of process, when do owners get involved in terms of decision making?
We, from a property management standpoint, once they purchase the property, and it is two separate companies. So we have Greater Orlando Home Buyers, which sells the property, and then we have the property manager guys, which is our property management company that manages the property. I own both companies. So we would basically set up, again, have a conversation with that investor. We typically request that a certain amount of funds be made available to us without getting their approval. That would be for things such as a normal maintenance item, like servicing the AC unit, right? I don't want to bother the investor or take my time to go back and say, okay, it's going to cost $69 to service the AC, and we do that every year. Is it okay if I spend $69? We ask up to $250 of discretionary funds that we use for normal maintenance related issues. If it goes from $250 to $500, then we call and have a conversation. That would be something like a hot water heater going out. We'd say, hey, hot water heater's out. It's going to cost $420 to replace that hot water heater. We get verbal approval from the investor, and we go ahead and replace the hot water heater. If it goes over the $500 mark, that's when we get into written permission. That's going to be something more like an AC unit, a compressor, a new roof, a new garage door, just things that are not out of the norm, but they're things, normal maintenance that has to be done, but on a longer term basis. And so we would call up and say, hey, the garage door needs to be replaced. It's going to be $2,200. We've got 3 quotes. Here's what we suggest. Maybe it's the lowest quote, maybe it's the middle quote, maybe it's the highest quote, and a reason why. And then we get written permission from the investor before we make that sort of investment. I mean, that's their money going out. So we want to make sure they're aware of what's going on and why we have to make that particular investment, or that particular expenditure on their investment.
Got it. Perfect. And so now, because the hour's running long and attention spans tend to wane, so tell us why your company is different.
Well, again, I look at it strictly from an investor standpoint. That's all that I'm working with is investors. My whole property management company has been built pretty much exclusively on internal investors selecting us as the property manager after they've purchased the property from us. And Eric, need to let your listeners know, so they don't have to choose us. It's just that 99% of the time, because we've purchased the property, rehabbed the property, and put the tenant in place, most of them say, everything about the property. We would just like to keep you on as property managers. I do offer 2 guarantees as well. The first guarantee is that if anything goes wrong within the first 12 months of them owning that property, I cover all expenses. Now, there are a couple exceptions to that. I don't cover tenant-related damage. The tenant goes in and damages the property and breaks a window, I'm not covering that, but typically we're billing that back to the investor, to the tenant anyway. If lightning strikes the house, if there's an act of God, a lightning strike, a flood, or something happens, again, that's something that I'm not covering. Anything other than that, and drain fields, I don't cover drain fields in particular instances where homes have drain fields. Other than that, I'm covering everything. If there's a leak in the roof, if an AC goes out, if the hot water heater for that first year, if I've done my job properly in the rehab, then there should be really no expenses during that first year. So it's basically just giving the investor kind of a peace of mind that we did the proper job in rehabbing that property, and we're going to back that up with a 1-year guarantee.
Oh.
The other guarantee we offer is a 12-month tenant guarantee. So we're guaranteeing that the tenant or the investor is going to have 12 months worth of rent with no expense from a tenant side. That is us putting a tenant in place. Normally we charge 50% of the first month's rent to place a tenant in place. So if, say, a tenant or an investor would buy a property and there's only 6 months left on that lease, maybe that tenant will renew and there won't be any expense. But if that tenant doesn't renew, then we're putting that next tenant in free of charge. There is no 50% of that first month's rent. We do that, provide that free of charge. So the investor is getting a full 12 months, if not more, of income coming in without any outflow going out.
All right. Well, that's two. I like guarantees, and so those are two pretty strong guarantees to help people decrease their risk. And so, is there anything you'd like to tell our audience? Again, primarily busy physicians and dentists. Is there anything I didn't ask you that you would like somebody who is considering a turnkey investment, what you would like them to know?
No, I'd challenge them to try one. Try one with us. I guarantee you'll be back for 2, 3, 4, 5, or 6, because that's what a lot of our investors do. They try one with us. And in my experience, Eric, I like to treat people like I want to be treated. And I feel if I treat people well, do a good job for them, take care of their investment, they're going to be back again and again and again and again. And I think that bodes well for both of us.
Absolutely. That's why I sought you and Jane out, because like I said, I've known you guys for a while. I know you guys' heart. I know how you treat those of us who come into your world on a regular basis, and I know that extends to the people that you take care of as well. And so I'm happy to get into partnership with you all. I'm happy that you're all going to be helping to support the Physicians Road, because we do this for free. We give this information away for free, and partnering with people like you all. Because I go out and hand pick people that I would be happy to work with. So we're glad to have you on board. And so you already have a nice handout on the Orlando market. And so we're going to offer that. We're going to set up a web page where it can be downloaded, and we'll take care of that. So for anyone listening, you can go to physicianturnkey.com, physicianturnkey.com, and you just click on Orlando, and that will show you where you can sign up and download that information. And then that will allow you to be able to get into contact with Greg and talk to him and his team and see if this is something that may work for you. Otherwise, Greg has given us great information about choosing turnkey providers. So if Greg is not the person you want to go with, and you want to go with in a different region, that's okay as well. The information he's given us has been invaluable. But one of the things I like about turnkey investing is you can basically create a portfolio around the country where you have team members managing the properties for you. And so you can end up getting geographic diversification through this process. And again, it's not going to be completely hands-off, but it's pretty hands-off as real estate goes. And so, again, we want to thank Greg for doing that. So please, thank you for listening to The Physicians Road, where you create your life in medicine. Today, we're on the path to wealth. Any feedback or any questions you have, please send it to feedback@thephysiciansroad.com, feedback@thephysiciansroad.com. And you can also join us on Facebook. We have a Facebook group, The Physicians Road. Just type that into your search bar, The Physicians Road, and you will find us there. So again, we will see you next time on The Physicians Road. Thanks, Greg.
Thanks, Eric.
The Physicians Road is brought to you by Vernonville Asset Management. Vernonville Asset Management was created to help physicians build wealth and create income beyond Wall Street. Through our exclusive private investments, doctors can begin to free themselves from the burdensome regulations in healthcare by creating income streams independent of medicine. Go to IncomeBeyondWallStreet.com to get your free report, Wall Street's Biggest Lie. Again, go to IncomeBeyondWallStreet.com to get Wall Street's Biggest Lie and free yourself today.
Thank you for listening to The Physicians Road, where you create your life in medicine on your own terms. Please go to thephysiciansroad.com and sign up for your free guides and resources.